Hello, dear traders. My name is Team, and this are the main trading ideas for current trading session. First of all, let's discuss the situation with NASDAQ 100, which is trading at 18,500. The American stock market is supported by expectations that the Federal Reserve System, despite signs of rising inflation, will soften national monetary policy by the end of the second quarter of this year. Last week, the Fed kept the interest rate at 5.50%, while the head of the regulator, Jerome Powell, noted that the regulator plans to reduce borrowing costs this year at least 3 times, with the first reduction expected in June. US stock markets have been rising for a long time, and a decrease in interest rates could be the driver that sends quotes to new highs, as a lower debt load will allow companies to borrow more. Analysts recommend holding long positions in the NASDAQ 100 index. Next, the dollar index. The dollar index is consolidating around 104.00. Yesterday, February data on orders for durable goods were published, which turned out to be positive. On a monthly basis, the indicator increased by 1.4% against the forecast of 1.2%, indicating growing consumer confidence in the prospects of the American economy. Investors are also monitoring comments from U.S. Federal Reserve officials. Speaking at Harvard University, board member Lisa Cook supported a cautious approach to lowering interest rates and noted that inflation, especially in the housing sector, remains high. Chicago Federal Reserve Bank President Austin Goolsbee said in an interview with Yahoo Finance that more inflation data should be seen before discussing policy easing. Such comments supported the dollar. And finally, British currency against dollar. The pair is trading at 1.2610. In the absence of significant economic releases, the movement of the pound is determined by external factors. It is only worth noting the publication of data on food price inflation from the Kantar Group, according to which the annualized rate by mid-March increased by only 4.5%, which is significantly less than 5.3% a month earlier. Experts note that the rate of price growth has slowed to its lowest level since February 2022, which may cause a decrease in the overall inflation rate in England. Against this background, the Bank of England may decide to ease monetary policy before the Fed, which will further weaken the pound. So, these are the main trading ideas for now. Thank you for your attention. Don't forget to subscribe to our YouTube channel.